Markets are at record highs. The Fed is just days away from a critical decision, and TikTok is now back in the spotlight. But underneath today's headlines, there are debates about how we measure corporate health, how we track inflation, and how two superpowers are negotiating their rivalry. Let's break it all down. So Wall Street kicked off this week with momentum, a lot of optimism today. The S&P 500 reached yet another record for this year, rising 0.47 on the day. The Nasdaq gained 0.94%, also getting a new high in, while the Dow ticked up only 0.11%. And the main driver here was broadening support in tech stocks. For months now, there have been gains in the S&P 500, which have been concentrated in just a handful of mega cap tech names, but now participation is widening, which is a healthy sign for bulls or people who are bullish in the stock market. And if you're not familiar with the terminology, bulls, when a bull attacks you, they're gonna try to throw you in the air with their horns. So just think about it like that. And when a bear attacks you, they claw down. So that's kind of why bearish means you think it's going down, bulls think it's going up. At least that's what my finance teacher told me back in school. But the momentum has been reinforced by optimism that the Fed will cut rates next week, making borrowing cheaper for businesses and fueling valuations to some extent. Now, next up, the Federal Reserve, the policy committee meets on September 16th and 17th, and they make their official decision on the 17th. And markets have all but priced in a cut. It's almost guaranteed at this point. Now it's just, are we getting this 25 basis point or are we getting this 0.5% cut? Now, according to the CME Federal Watch tool, which I have displayed on the screen, there's this 95.9% probability of a 25 basis point cut, or 0.25% off of the Fed funds rate on the 17th. Now, if this is delivered, it will be the Fed's first cut since last December, so the first cut of the year, and I can't believe we're already near the midpoint for September. The year's almost gone and behind us now. But rate cuts are just one piece of the puzzle. The Fed will also release its updated dot plot the next week, which is a chart that maps out where each Fed official expects interest rates to be at by the end of next year. By the end of this year, next year, and beyond. So a lot of people are going to be watching the dot plot. But think of the dot plot as the Fed's unofficial playbook. Back in June, the consensus suggested 2 cuts in 2025, but after a string of weak labor market data and downward job revisions, analysts believe the Fed could hint at a longer easing cycle. Like, for example, we got Morgan Stanley expecting policymakers to pencil in an extra 0.5 point of cuts by 2026. Now, that's why investors care so much about dots. They're less about the decision this week and more about the Fed's entire path over the next 2 years. And, people like trying to make predictions about what's going to happen, and this one plays a huge part into how to factor in your investment thesis, where you think the economy's going, how's business going to perform. But outside of the Fed, President Trump stirred debate with a push to end quarterly earnings reports. And I have this displayed. This is on Truth Social, Trump's platform. And for more than 50 years, U.S. companies have reported results every 3 months, and creating the rhythm that drives Wall Street earnings season. Forecasts and guidance and it's like it's never ending. All right, I finally read this earnings report, I listened to the earnings call, and then it's time for it again. So now Trump argues that this cycle pressures executives to focus on the short term rather than building sustainable long-term businesses. Now on Truth Social, he's suggested companies should instead report every 6 months. Now the long-term stock exchange echoed that call last week, saying it plans to petition the SEC to allow semi-annual reporting. Proponents argue it would reduce costs and foster long-term thinking. Critics counter that less frequent disclosure could reduce transparency and create more volatility when results finally hit. And when you think about it, you go much longer without knowing what's going on. So in the plus side, if you have a bad quarter, you have some time to make it up. But like on the bad end, what if there's 2 bad quarters and then the results hit even worse? And like for the people who don't necessarily watch earnings or know about that, even though they're investors, like think about your passive investors, like 401k investors who just passively invest a portion of their paychecks into the stock market for retirement. Now, some of those, like now's a time where more people are interested than ever into the stock market and learning how everything works. If there's these 6-month time frames instead of these 3-month time frames, and then the results are bad, it could be an even heavier hitter than it has. So if adopted, it would be one of the biggest changes to corporate reporting in decades. But then there's more. So TikTok. There's a chance that we could reach a TikTok deal here pretty soon. So after months of tension, the US and Chinese officials announced a framework agreement. So this is only a framework agreement to prevent the app from being banned in America. Now, the deal would transfer TikTok into the hands of American ownership, addressing national security concerns about its parent company, ByteDance, which is a Chinese company. Treasury Secretary Scott Bessent confirmed the breakthrough, but declined to share any more details than what we're discussing here. Now, will TikTok's algorithm be included in the sale? What concessions did the US make in return? We don't really know any of that yet. So what we do know, though, is that the deal is still requires sign off from President Trump and the Chinese President Xi Jinping, who are scheduled to speak on Friday. But here's a catch. While TikTok may be spared other thorny issues like export controls, tariffs, intellectual property, all of those were left unresolved. So that means that this deal is more of a pause than a resolution in the larger grand scheme of things as far as US-China economic rivalry goes. So here's where everything stands, everybody. Markets are riding record highs. The Fed is virtually guaranteed to cut rates this week, but the dot plot will decide how deep the rates could go in the long term, all the way out into 2026. So be on the lookout for that. Trump calls to end quarterly reporting, which could shake up decades of Wall Street tradition. And the US and China may have saved TikTok for now, but the deeper fight is still far from over. Investors are riding optimism, but with so many moving pieces, the Fed's dot plot, corporate reporting reforms, U.S.-China relations, and stubborn inflation, this market could shift direction quickly. Next week, this week's Fed meeting may be the most consequential since Powell's Jackson Hole speech, and everybody's going to be watching. So I'll be here to talk about what happens, everybody. Hope the start of your week was a blast. I had a pretty good birthday. It was super low key. Did everything I wanted to do. Ton of basketball. I even got my basketball right here. I got a bucket for y'all. So that's what I got today, y'all. I'll be back tomorrow to talk about everything that happened, and y'all have a blast.